are heading closer to FOMC day and Bitcoin is tumbling. This is not good. It's trying its best here to hold support at $29,000. How low can Bitcoin fall? Markets are feeling very, very tentative of what could be a rug pulling by Jerome Powell tomorrow. Markets expecting a 25 basis point rate hike. How do we prepare for this? What levels am I looking for, and what is my game plan? As always, guys, if you want to buy or trade any of these cryptocurrencies, you can support the channel by trading with Bybit, Ijaz.uk/Bybit, links in description. Strong candle here on the hourly chart by Bitcoin, trying to break through 29,200 range here. Looking quite nice, right? It looks like it held support at 29,000, but the bigger picture has me worried, and that's what I have to share with you. And it's going to start by us zooming out to the daily chart. And when we get to the daily chart, I want you guys to take out the EMA ribbon. Again, if you're not familiar with this stuff, Ijaz.uk/TA, get yourself caught up rapidly so you know what's going on. And what did we get yesterday? A horrible close below our daily EMA ribbon. And this is what we spoke about at the weekend. At the weekend, I said, get ready for a Jerome Powell rugging. Make sure you catch up on that video here, because I called this. I said, guys, we are consolidating into our EMA ribbon here. If this does not hold, we're spelling horrible price targets ahead. And you can see this, you could have argued, was just a consolidation, but now no longer is that so. We're below our EMA ribbon now, and we're trying to now break back into our EMA ribbon, but it's going to be difficult. Look how powerful that 3% day was yesterday, driving us below our daily EMA ribbon. Now what we now need to look at is the weekly EMA ribbon. And you guys know I've been calling this for a while. I don't wait for it to happen before I start calling it. No, when the price is extended at 31.8, when everybody's getting excited, I'm like, guys, we're losing steam here. We can't seem to break through this level. We might need to come back to our EMA ribbon, and I called for 27.7. That's where the EMA ribbon starts, and I'll be looking for DCA opportunities into this EMA ribbon, okay? Now remember, it's not all long-term doom and gloom. Why? Because we did get the higher high. We did just wick here higher than this previous peak. So we went up, we came back down. We went up, wicked higher than the previous wick, and now we can come back down. So that's okay. But for now, in the short term, over the next couple of weeks, I'm looking for the EMA ribbon. Maybe we don't get the opportunity, but as we get lower, I'm nibbling. And I said that to you guys. I said, guys, if we head to 29,000, I'm going to start nibbling. If we fall lower than that, I'm going to nibble even more. And I'm going to wait for those next levels to start playing out, and I'll start to nibble. So you can see here the dotted line we've got there, this yellow dotted line, 27.7 is what I'm looking for. Of course, for now, we're holding support at 29, but I've already done my first nibble at 29. So if we want to bounce from here and go straight onwards, I'm ready for that too. I've done a bit of dip buying, right? I'm good for it to go, but I don't think that's going to be the case. I think there's a little bit of pain left in this market to come down to this 28 and maybe that 27.7 mark at the EMA ribbon, just like it did here, right? To come get some support, to get some moral support before it can bounce and go on its next move. So that's what we're looking for here on Bitcoin. You can see here the different patterns that are playing out are no longer looking very bullish, right? We're falling out of this wedge here. The cup and handle pattern is looking very worrying. Remember I said if we fail this, we're forming an M pattern. And that's the risk, right? If we're coming down to test our EMA ribbon, if we fail to test our weekly EMA ribbon and we just break all the way down through it, we have a horrible M pattern playing out, and we don't want that. So this is not ideal that we're coming to our EMA ribbon. I will be nibbling the closer we come to our EMA ribbon, but make no mistake about it. Coming into our EMA ribbon is one thing. Losing our EMA ribbon could be horrible, because then we have this big, I want to reiterate this for you guys one more time, this big M pattern where we go to the neckline twice, we get rejected, we come back down here, and we lose it. So the pullback is all well and good, but we cannot fall lower than this wick. Remember this wick here in the middle of June? We fell as low as 24.8. We cannot afford to go lower than that. Anything into the EMA ribbon, 27, 26, even 25.5, that kind of range is okay. That's a pullback. But losing the trend will be if we created a lower low, falling lower than that 24.8. Very important that we understand the difference here. I'm looking for DCA opportunities into this region, guys. You can see here we're following this big trend here on the weekly chart. I already set this box, and we're now heading towards this box. When I set this box was a couple of weeks back, and you can see this is where I'm looking for the opportunity to buy. It'll tie in with that EMA ribbon. It'll be at the bottom of our channel, and that's where I want to be nibbling, getting ready for the next move to the upside. Now, why are markets tentative? Well, they're expecting Jerome Powell to come out aggressive. They're expecting him to come out hot. They're expecting him to say difficult things about inflation and continue to keep his foot on the neck of the markets. They're expecting that no longer did we pivot. right? Because there was a small portion of the market that thought that the pause we had last time out meant that we're done with rate hikes. We weren't. They just said we're pausing. And now you can see that the markets are understanding that he's going to go and do 25 basis points tomorrow and that he's going to continue his rate hiking cycle. Now, longer term, going into the next meeting, which is September the 20th, markets are actually expecting him to pause. They're expecting 25 basis points tomorrow, but markets are expecting him to pause at the next meeting. So we're not far away from getting this pause. And when we do get this pause, and then we stay at that interest rate for a while, markets will then switch their focus to when are we going to get that proper pivot, where we get our first interest rate cut. Can that be by mid next year? And that's where all hell's going to break loose. That's where risk will rotate on. And the money printers will be burring again, which of course we know is a huge catalyst for Bitcoin. Now it's important to remember one thing, because a lot of people who are new into the markets are losing perspective on this. You, if you've sat through this over the last year to 18 months, have just been through one of the tightest, fastest rate hiking cycles we have ever seen in history. Right? We went from the pandemic period where there was unprecedented amount of printing to suddenly getting a violent hoovering up of money from the economy. It was a tough time. Risk was thoroughly off, and it's a tough time for any risk assets, let alone the craziest asset class known to man, which is crypto, right? But now we're getting to the end of it. It's the final innings of this rate hiking cycle, and the move is going to promise to be explosive with not only us pivoting the monetary policy and turning to more accommodative stance, hopefully at some point next year, but also tying in perfectly with that Bitcoin halving. Definitely an exciting time to be in the market. And I personally would not want to be in this market right now. I'm not trying to time this. You guys know that. I'm in my positions. I'm waiting. I'm locked and loaded and looking for interesting DCA opportunities. It's important to understand what is causing this recent pain in Bitcoin is this, right? From a technical perspective, I just explained it from a fundamental perspective, but from a technical perspective, we know that this dollar index has been our nemesis, right? The dollar index indicates whether the markets are feeling risk on or risk off. And you can see here, the last 2 weeks here has been very heavily risk off. But something worrying is happening right now, guys. Remember when I said we were still in this bearish pattern, this descending triangle, we broke to the downside? Well, then they managed to rally. The dollar index managed to rally. But not only has it managed to rally, it's gone back in the pattern. So this is bullish for dollar index, which is bad for Bitcoin. We do not want this circumstance to play out. So we have to keep a close eye on this. We want to reject it and send it back to the downside, but unfortunately, Jerome Powell may give them another catalyst to continue moving in this direction. They could then try to reclaim, or at least head towards, its weekly EMA ribbon. So that's what we have to watch for here. Any sustained movements on the dollar index is what's going to cause pain in Bitcoin. Look at these green days that the dollar index is racking up here. This is what's causing the pain on Bitcoin. Okay, and you can see now it's coming into its daily EMA ribbon. So just like Bitcoin lost its daily EMA ribbon, we need this to get rejected. We need to send this down here, but Jerome Powell could do the opposite. Jerome Powell could rug us tomorrow, put risk back off, and let the dollar index do this back above its daily EMA ribbon, which could spell more period of pain for Bitcoin. That is why I'm looking for 27.7. That is why I'm looking for 28K. I'm looking for more dip buying opportunities. The momentum just doesn't quite feel right that Bitcoin's ready to bounce from 29 and break through 31. Even if it does bounce now, maybe it's just going to bounce to 30 and then fall back down again. Like, it just doesn't have the momentum to do what we need Bitcoin to do, which is ultimately to break through this cup and handle pattern, say goodbye to that neckline, which is sitting at that 30 to 31K region, and go towards our price target, right? Go towards this 45 price target. It doesn't look like we're ready to play out this journey yet. Now, speaking of other movements here in the market, we have seen that Render has been moving nicely on the day here, up 3% here today on the day as Apple decide to share its Vision Pro developer kit. Again, guys, if you're not familiar, a lot of people are tying the movements of Render to Apple due to their partnership. So that's where a lot of that movement is coming from in the Render community. We're also seeing interesting moves here today on WorldCoin. Remember, WorldCoin tumbled quite heavily yesterday after initially opening up quite high. If I show you the hourly chart, you can see it opened up really high and then spent most of yesterday retracing before now having a bit of a positive 3.7% move here today. If you haven't watched my video on WorldCoin, make sure you watch that. It's the one video you need. I explain everything. Tokenomics, fundamentals, whether I'm buying, it's all in there. Go watch that episode. Cadena also moving 3%. I've done an impressive video for you guys breaking down Cadena versus Casper, two solid layer one solutions. I'm going to link that up for you guys to go watch as well. Definitely go watch those videos, and I'll see you in the next one.